So here we are, we're really worried about Iran with regards to supply, but at the same time, the International Energy Agency coming out with a much weaker demand outlook. This could actually mean weaker demand. So the point is it actually going to close the gap between the supply constraints that we've seen and the weaker demand that is expected?
Absolutely, yes. The demand picture is one that is really being perceived to change at the moment. As you mentioned yesterday, the US EIA cut its forecast for demand growth in 2012, and basically the issue is that higher oil prices are expected to lead to less demand. It's kind of obvious in a way, but it doesn't always follow that way. So the IEA in Paris has previously said that they're very concerned that the rise in oil prices will be a major drag on the global economic recovery, particularly in Europe and the US. So the concern is that economic growth won't be so robust. We've also, of course, seen even indications in China that its appetite for oil is not totally insatiable. It's not immune to the oil price, because we've seen that the growth in imports in China has also been easing. So we've seen a drop below the $120 a barrel Brent, and it seems that although this is in the past few months, generally the prices have snapped quite quickly above the 120 level. It seems at the moment to be finding it a little bit tougher to get back up. Yeah. So there could be some respite there for motorists.
Okay, but I mean, when we see this slightly weaker demand that is coming to the fore, is it because of demand destruction, because oil prices have been relatively high? Or do you think that it's just the nature of the fact that we're starting to see a more stable and more normal growth scenario coming to the fore after all the stimulus that we've seen on a global level?
It's a mixture. It's a bit of both. In terms of the US, we're seeing rising stockpiles there. And that's partly, obviously, because people are responding to the higher prices, but also the growth, the recovery to growth in the West and in Europe and in North America is a little bit faltering. We saw some jobs numbers out of the US last week, and this sort of very strong trend of job creation that we had previously seen wasn't continued. So it's a little bit in fits and starts on the demand side. So we'll probably need to see a more consistent run of positive economic data to suggest that the demand side in and of itself is working quite right. And of course then you've got this other issue with regard to high prices that you pointed to.
Let's also just take a look at the fact that looking at some of the drilling into the numbers that came through from the US Energy Information Administration, the numbers that we were alluding to a bit earlier, cutting its 2012 world oil demand growth forecast by 170,000 barrels per day to around 890,000 barrels per day. I mean, these numbers are quite big, and you were talking about the International Energy Agency coming out with numbers soon, and OPEC as well. Would you say that these numbers are actually going to be a very fair account of what we can expect, and how often have they actually gotten these forecasts right in the past?
It's a good question. I mean, forecasts in the oil business don't have a great track record, that's for sure. And if you just cast your eye over previous research, it is a humbling experience for whoever put it together. The fact is that the biggest factor influencing oil price forecasts is the current oil price. That when the current oil price rises, analysts tend to increase their forecasts. It's counterintuitive. Actually, it should be the other way around. That if the oil price rises, people should expect demand destruction. So the issue of forecasting is very difficult. It doesn't have a great track record. But of course, the nearer term that we forecast, then the better chance we have of being right. So 4 months into 2012, I think that these figures will be treated with less skepticism than some of the other numbers that we see sometimes.
So what is exciting, Tom, is that Iran has agreed to renew discussions with the UN Security Council, with the permanent members of the UN Security Council. Are you excited about this news, and do you think we could actually see Iran scrapping its nuclear enrichment program?
Well, it's very interesting news, and it'll be interesting to see on a number of different levels. One, there has been great dispute in the oil market about the Iran premium, about exactly how big it is. Some people have said it's a $20 premium on the oil price. That if the supply and demand fundamentals alone were deciding the price, it would be considerably lower. However, other analysts that we've spoken to will say it's only $1 or $2. So it'll be interesting to see exactly how the oil markets do react to any positive news out of Iran. Now, in terms of the substantive issue itself, again, this is an area where there's not a very strong track record. At the moment, we've got talks about talks. The actual talks in the past have always broken down without getting very far, and Iran pretty much goes back to where it was, and from the West's point of view, where it was is seeking to make a nuclear bomb. Yeah. So at the moment, there are talks about it. There are areas where a deal could be done. The exact level of enrichment that Iran might be prepared to row back from. If you row back from this 20% enrichment of uranium that they're currently doing, back to the 5% enriched uranium that you need for nuclear power plants. That might be something that the Western countries are more comfortable with. So there are certainly things that could be achieved there that might be perceived in the broader world as progress. So yes, though there certainly are, we could see some news there that might influence oil prices on the downward side.